Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 20th, 2025, and we're taking a close look at USDCHF, the US dollar versus the Swiss franc. We have a lot to cover, from recent news events creating volatility to a deep dive into the technicals across multiple timeframes. First, let's talk about the fundamental picture, which is currently a mixed bag for the US dollar. Recent headlines show the dollar has been experiencing broad-based selling pressure, pushing USDCHF below the key psychological level of 0.8000. Some reports point to dollar weakness following fears over regional lenders and the Fed's dovish beige book, which indicated rising prices but low labor demand. However, we've also seen some surprisingly strong U.S. data, like the Empire State Manufacturing Index for October, which jumped significantly and beat expectations. This strong manufacturing data would typically support a bullish outlook for the dollar, but it seems to be overshadowed by other concerns. On the other side of the pair, the Swiss National Bank has reportedly concluded its easing cycle, which could add some underlying strength to the franc. This means the CHF's performance is becoming more dependent on the relative weakness or strength of other currencies, especially the US dollar. Analysts in the news have highlighted some critical price levels to watch. Specifically, the 0.7900 handle is being watched as a key support level where buyers might step in. Conversely, the 0.8000 to 0.8070 area is being cited as major resistance. Now, let's switch over to the charts and see how this narrative is playing out in the price action. Here on the daily chart, we can see the broader context, and it is undeniably bearish for most of 2025. After peaking above 0.91 in early January, the pair has been in a consistent and significant downtrend. We saw a particularly sharp leg down in early April, where the price plunged from around 0.88 to nearly 0.81 in just a few days. Following that drop, the price has been grinding lower, making a series of lower highs and lower lows. This confirms the fundamental story of persistent US dollar weakness throughout the year. The price action from September is particularly interesting, as it correlates directly with the news we just discussed. You can see this major drop on September 16th, taking the price from above 0.7940 all the way down to a low of 0.7827 the next day. This established a major support zone between 0.7820 and 0.7900. This is the key swing level around the 0.79 handle that reports are talking about. Since hitting that low, we've seen a bounce, with price attempting to reclaim higher ground, but it has struggled to stay above the 0.8000 mark. The last few weeks show a battle taking place, with price currently trading just below 0.8000 after failing to hold the highs from early October. This long-term trend is clearly down, so any bullish case requires a significant change in momentum. The primary resistance to watch on this time frame is that psychologically important 0.8000 level, followed by the early October high around 0.8060. On the downside, the key support is that large zone established in mid-September around 0.7850. Now, let's zoom into the 1-hour chart to get a better look at the more recent price action. Here we can more clearly see the rejection from the highs above 0.8060 back on October 9th and 10th. There was a very sharp sell-off here, which again aligns with reports of dollar weakness mounting. This move took the pair from 0.8060 all the way down to below 0.7990 in about 24 hours. Since that drop, the price has been in a clear downtrend on this hourly time frame. We can see a series of lower highs, with bounces being sold off consistently. For instance, the rally on October 13th was capped at 0.8040 before selling off again. Then, the more aggressive selling resumed on October 15th, pushing the price down from 0.8015. The most recent action shows a steep decline through the 0.8000 level, falling hard to find support around 0.7914 on October 16th. The price has since consolidated in a tight range, struggling to make any meaningful recovery. This short-term picture is quite bearish, with sellers clearly in control as long as the price remains below the 0.8000 handle. The immediate resistance on this chart is around the 0.7950 area, where it has struggled over the last day. A break above that could see a test of 0.7980, but the bigger test remains at 0.8000. The immediate support is the recent low around 0.7870 from October 17th. Drilling down even further to the 15-minute chart gives us a microscopic view of the current battle. Looking at the last 24 hours of trading, we can see the extreme choppiness and lack of direction. Price fell sharply into the US session on October 16th, bottoming out around 0.7914. It then spent the rest of the day and the Asian session today consolidating sideways. We can draw a very short-term range here, with support near 0.7910 and resistance around 0.7935. This tight range indicates indecision in the market as traders await the next catalyst. The volume has been relatively light during this consolidation, which is typical for such price action. For day traders, a break of this small range could signal the next short-term move. A break below 0.7910 could trigger another wave of selling towards the major daily support at 0.7900. A convincing break above 0.7940 could signal a push towards the 0.7980 resistance on the hourly chart. This view highlights just how critical the current price area is. The market is coiling up right on top of a major long-term support level, and the direction it breaks from here could be significant. So let's pull back to the daily chart to recap and discuss what to look for going forward. The key takeaway is that USDCHF is at a critical inflection point. The long-term trend is bearish, but the price is currently sitting on a major support zone between 0.7820 and 0.7900. The immediate minor resistance is around 0.7950, with major psychological resistance at 0.8000. Above that, the next significant hurdle for bulls is at 0.8070. So, what are the potential scenarios? Let's start with the bearish case. Given the strong downtrend, this is the path of least resistance. If we see a decisive daily close below the 0.7900 handle, it would be a strong bearish signal. A break below the September low of 0.7827 would confirm the downtrend continuation and open up targets for a new cycle low. This would likely be driven by more weak U.S. economic data or a significant risk-off event that boosts the safe haven Swiss franc. I would place the likelihood of this trend continuation in the short to medium term at about 50%, especially if upcoming U.S. inflation data is soft. Now for the bullish case. Bulls need to see the price hold firmly above this 0.7900 support level. For a true reversal signal, we need to see a break and close above the major resistance at 0.8000. A move above the October high of 0.8070 would be a much stronger confirmation that a short-term bottom is in place. This scenario would require a catalyst, like surprisingly strong U.S. data that forces the market to price out Fed rate cuts, or perhaps some intervention from the Swiss National Bank. The likelihood of this bullish reversal is probably around 35% right now, as it goes against the prevailing trend. The most likely scenario in the immediate short term, maybe about a 60% probability, is continued range-bound, choppy price action between 0.7900 and 0.8000 as the market digests the conflicting fundamental signals. Keep an eye on upcoming US CPI and PMI figures, as these will be major market movers. Any statements from Fed or S&B officials will also be crucial. That's our in-depth look at USDCHF. Please remember, this analysis is for educational purposes only and should not be taken as financial advice. Always do your own research and risk management before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to explain the charts, and ring the bell so you don't miss our next update. Thanks for watching.